All right, so get this.
Hmm.
You guys have sent in a ton of research on cryptocurrency.
Yeah.
And there's this one blog post that just stood out to me. It's called
Okay.
From Stock Pools to Token Pumps, Crypto's History Lesson from Wall Street's Past.
Wow.
Yeah, and it's wild. We're going to uncover some seriously mind-blowing parallels
Okay.
between the crypto market today and the stock market back in the early 1900s.
Interesting.
Buckle up, because we're diving into a world of speculation, insider trading, and the wild ride of market regulation, with some modern twists, of course.
Of course.
What I found really captivating about this blog
Yeah.
was the central analogy that it draws between early Wall Street and the current crypto scene. Both are labeled as Wild West eras, and the similarities are pretty startling.
Yeah, they really are. I mean, one of the first things that jumped out at me was the lack of regulation in both eras.
Oh, yeah, for sure.
The blog tells this crazy story of Ivar Kruger, the match king of the 1920s.
Oh, yeah, I remember that.
Who built a matchstick empire, get this, on a foundation of fake bonds.
No way.
It's true.
It's like holding a mirror up to history, but instead of seeing a reflection,
Right.
we see Bitcoin.
Exactly. And it makes you wonder, are we destined to repeat history? I mean, both situations highlight the dangers of a regulatory void.
Right. It's crazy how some things never change.
Yeah.
And speaking of things that never change, the blog also highlights how speculation was a driving force in both markets.
It's true.
They compare the frenzy around RCA stock in 1928,
Oh, yeah.
which was driven by the promise of radio, to the Dogecoin surge in 2021, fueled by, you guessed it, Elon Musk's tweets.
I mean, it seems like whether it's the allure of radio waves or the meme-worthy charm of a Shiba Inu dog, speculation has always had a way of captivating investors.
That's a really good point.
But it's worth noting that the speculative fervor in both cases was happening in a context of limited regulation, making it easier for hype and manipulation to run rampant.
So true.
Yeah.
It's incredible how certain patterns just keep popping up throughout history.
Totally.
Another one the blog points out is insider trading.
Oh, right.
They compare Albert Wiggin, who shorted his own bank stock before the 1929 crash, with Alex Mashinsky, the CEO of Celsius Network, who did something similar in 2022.
Wow. These cases really underscore how individuals with access to privileged information can exploit the system for personal gain, and the blog does a good job of highlighting this concept of information asymmetry, which is essentially the uneven distribution of knowledge. Oh, wow.
Yeah.
So it's like some players have a secret playbook, while others are trying to figure out the rules of the game as they go along.
It's a good analogy.
And that brings us to the concept of regulatory forbearance, right? It sounds like both the early stock market and the current crypto market operated with this approach.
Yeah, it's a fascinating concept.
Can you explain that a bit further?
Sure. So regulatory forbearance is basically when authorities intentionally take a hands-off approach.
To let new markets develop without imposing strict regulations.
Interesting.
It's a calculated gamble. The idea is to foster innovation, but it also leaves the door open for potential issues like market manipulation and even fraud.
So it's like walking a tightrope between encouraging growth and preventing disaster.
Yeah, that's a great way to put it.
And it seems both of these eras tipped the scales a bit too far towards needing a safety net.
Absolutely. And the blog points out some fascinating parallels in how this played out.
Okay.
For instance, they compare the 1926 General Motors stock pool to the 2022 Ethereum merge.
Wait, the GM stock pool, what happened there?
Well, picture this. A group of insiders, executives, and bankers secretly buying up GM shares while strategically spreading positive rumors.
Okay, that sounds shady.
It was, and they made a huge profit when the stock price soared after a major announcement.
Wow.
But the core issue here was information asymmetry. They knew something the public didn't, giving them a distinct advantage.
It's like they were playing chess while everyone else was playing checkers.
Exactly. And this brings us to the Ethereum merge.
Okay.
Core developers and large crypto firms had detailed knowledge of the merge's progress information, not readily available to everyday investors.
So, similar to the GM executives, they had an edge. But instead of newspapers, they were using platforms like Twitter and Discord to spread information, right?
Precisely. The tools may have changed, but the core principle of information asymmetry and its potential for exploitation remains a persistent issue.
Wow.
Whether it's whispered secrets in smoky back rooms or cryptic tweets,
Yeah.
Those with early access to information hold a powerful advantage.
That's crazy. So it's really fascinating how these historical echoes just keep emerging.
Yeah.
It begs the question, if history is indeed rhyming,
Yeah.
are there lessons we can learn from the past to help navigate the future of crypto?
That's the million-dollar question, isn't it? And the blog makes a really compelling argument that the 1929 stock market crash wasn't just a financial meltdown, it was a wake-up call. That exposed this desperate need for rules and oversight.
Oh, totally. It's like that saying, fool me once, shame on you, fool me twice.
Right.
You know the rest.
Exactly. And when the dust settled after that crash in 29,
Yeah.
investors started uncovering all this massive fraud. Remember the Match King and his fake bonds?
Oh, yeah.
And so the public outcry, it actually led to the creation of the Securities Exchange Act of 1934.
Wow.
Which established the foundation for market regulation as we know it today.
So it took a major catastrophe to finally spur meaningful change.
It seems like it.
Now, fast forward to the crypto world.
Yeah.
It feels like we're kind of witnessing a similar, Kruger moment.
Oh, yeah.
With the collapses of FTX, Terra, and all the others in 2022.
Right.
It's like history is giving us a second chance to get things right.
The parallels are pretty striking.
Yeah.
And, all these recent crypto collapses, they've triggered this global push for regulation. But the real challenge with regulating crypto is that it operates across borders.
Right.
Making it very different from the stock market back in the 1930s.
Okay.
Because back then, regulators only really dealt with domestic markets.
That makes sense.
So imagine trying to enforce these rules when traders can simply move their operations to another country with more lenient regulations.
Yeah. That's tough. It's like a high-stakes game of whack-a-mole.
Exactly.
But with digital assets.
Right. And the blog even points to how South Korea's ban on anonymous crypto trading
Oh, wow.
led traders to just move their activities elsewhere.
Okay.
And China's ban on crypto mining simply shifted those operations to other countries.
So it's clear that for regulations to be truly effective in the crypto space, international collaboration is absolutely essential.
Yeah, 100%.
It sounds like a monumental task.
It is.
But a necessary one.
Definitely.
But amidst all this talk of regulation and historical parallels, it's important to remember that there's more to the story, right?
Yeah.
Crypto isn't just about speculation and trading.
Yeah, that's a great point.
There's this whole other aspect.
Right.
The potential of blockchain technology itself.
You're absolutely right. The blog emphasizes this crucial distinction between blockchain technology and cryptocurrency as an asset class. It argues that regulation, rather than hindering innovation, could actually unlock blockchain's true potential.
That's a fascinating perspective. It sounds counterintuitive. How can adding regulations unlock potential?
Well, by addressing investor protection concerns in these crypto markets, regulators can actually build trust and pave the way for broader adoption of blockchain technology in different sectors. Imagine blockchain being utilized in everyday applications like payments, banking, supply chain management, and more.
So instead of just focusing on speculative trading, we could see blockchain being used to improve systems and solve real-world problems.
Right.
It sounds like building bridges, finding a balance between fostering innovation and safeguarding the system.
Exactly. And this whole idea of building bridges isn't entirely new. The blog draws a compelling comparison with the emergence of junk bonds back in the 1980s.
Junk bonds? I'm not familiar with those.
Okay, so they were initially hailed as this financial innovation because they allowed companies with lower credit ratings to access capital.
Oh.
But, as you might imagine, they also carried higher risks.
Yeah.
The junk bond market saw both significant successes and massive losses.
Okay.
And the blog actually draws a parallel between junk bonds and the rise of DeFi, or decentralized finance, in the crypto world, particularly in 2020.
So both junk bonds and DeFi were seen as disruptive innovations with the potential for high rewards, but also significant risks.
Exactly.
I'm starting to see the connection.
And just like regulators grappled with finding the right balance for junk bonds, they face a similar challenge with DeFi.
That makes sense.
It's a balancing act, ensuring that innovation isn't stifled while protecting investors from undue harm.
It seems like finding that sweet spot between fostering innovation and implementing necessary safeguards is a recurring theme throughout financial history.
It is.
Yeah.
And the blog drives home the point that by understanding these historical patterns, we can potentially avoid repeating the mistakes of the past and create a more resilient and equitable financial future.
It feels like we're kind of standing at a crossroads.
Yeah.
with crypto. Looking back at history,
Hmm.
we see these patterns, these rhymes.
Yeah.
And it makes you wonder, are we headed down like a familiar path? Or can we forge a new direction?
That's a great question.
Yeah.
And that's actually where this blog post really shines.
Yeah.
It's not just about drawing parallels between the past and present, but it's about how we can use those historical lessons to guide our decisions in the future.
Okay.
It's like having this roadmap,
Mm-hmm.
but instead of it showing us the exact route, it highlights potential pitfalls and opportunities along the way.
So, I like that.
Yeah.
That's a really good analogy. It's like history doesn't have to repeat itself if we're paying attention to the signs,
Exactly.
So, okay, history is rhyming, but it doesn't have to be a perfect rhyme. We have a chance to change the tune.
Yeah.
But how? What can our listener, who's been deep diving into all this crypto research, what can they do with these insights?
Well, I think first and foremost, it's crucial to approach the crypto world with a healthy dose of historical awareness.
Okay.
The patterns we've been talking about, like information asymmetry and the need for regulation, those are crucial factors to consider.
Yeah.
By understanding these dynamics, investors can make more informed decisions.
Right.
And potentially avoid falling into the same traps that snared people in the past.
So it's like, don't just jump into the hype, take a step back.
Totally.
Look at the bigger picture.
Absolutely.
And see how history might be informing the present.
Yeah, I think that's a great way to put it.
But, it's not all doom and gloom.
Right.
There's also the potential of blockchain technology to consider.
Oh, for sure.
Right.
Absolutely. While cryptocurrencies often grab the headlines, we can't lose sight of the underlying technology.
Yeah.
Blockchain has this huge potential to revolutionize various industries. And as we've discussed, regulation can play a key role in unlocking that potential.
Oh.
By creating a more stable and transparent environment, regulators can foster responsible innovation and pave the way for broader adoption of blockchain technology.
It sounds like, again, a very delicate dance.
It is.
Finding that balance between regulation and innovation.
Yeah.
But history shows us it's possible, right?
It is.
Yeah.
Just look at the evolution of the financial system over the past century.
Yeah.
We've learned from past crises, we've adapted our regulations,
Right.
and ultimately I think we've created a more resilient and robust system.
Okay.
The same can be true for crypto.
So for our listener,
Yeah.
as you continue to kind of navigate this exciting and sometimes turbulent world of crypto, just remember to keep this historical perspective in mind.
Ask yourself, what echoes of the past do you see playing out in the crypto space today? And how can those historical lessons guide your own decisions, whether you're an investor or a developer, or simply someone who's curious about this transformative technology?
This deep dive has been a wild ride through history, uncovering these fascinating parallels and really thought-provoking insights. We've explored the Wild West beginnings.
It's true.
The speculative frenzy, the inevitable push for regulation, and the immense potential of blockchain technology.
Yeah.
As we wrap up, we just encourage you to keep asking those questions, stay informed, and never stop diving deeper into the world around you.